What's up guys and welcome to Wall Street Millennial. On this channel, we cover all things stocks and investing. In this video, we're going to go over the greatest gains and losses of the WallstreetBets forum from the past week, so we can learn from other people's experiences. Before we get into the video, we'd like to thank our channel members who get access to these non-time sensitive videos one day in advance. They also get to vote on some of our video topics. First up, we have user Kalu Billy, who finds himself in the unfortunate position of having lost 69% of his position, or more than $34,000 on Palantir YOLOs. He owns 208 contracts of $25 strike calls on Palantir, expiring on May 21st. Palantir has been on a downward slope since its highs in late January, declining more than 40% to $22.30. This puts the OP's $25 calls 12% out of the money with less than 3 weeks till expiry. Part of this decrease has been driven by insider selling. Palantir co-founder Peter Thiel and current CEO Alex Karp have sold more than $400 million worth of shares since the direct listing. This decrease in stock price as well as theta decay have contributed to his $34,000 loss. The OP was all in on this investment for $49,500. It might seem unwise to YOLO such a huge amount of money into a relatively short-term options play, but the OP has high conviction in Palantir. He is former military and says he had exposure to Palantir's Gotham product. Gotham is a software tool used by the military and intelligence agencies to track terrorists among other things. Given his long-term conviction on Palantir, the OP may have been better off owning the stock and selling covered calls. This would give him long exposure, mitigate his risk, and benefit from the high implied volatility. However, he appears to be relatively new to options and has not yet had time to learn covered calls.
What a joker!
He is currently holding on to $34,000 of unrealized losses and time is running out until expiry. His only hope is for Alex Karp to pull another fast one and do something to increase the price in the next couple weeks. We wish you luck. Next up we have user Talamo, who is down $185,000 on his Apple calls. Apple has been one of the best performing stocks in the entire market for multiple decades, which has rewarded it with a $2 trillion market cap. Some commenters are perplexed as to how the OP could lose money on such a high-quality stock. The OP explains that he was able to do this with 0 days till expiry call options right before earnings. This strategy is basically akin to buying a lottery ticket. On April 28, Apple reported earnings that far exceeded expectations, with revenue increasing 54%. It also authorized a $90 billion share buyback program. Inexplicably, the stock actually decreased by a few percentage points in the days following this seemingly great news. This unfavorable price action cost the OP $185,000 of losses. Despite the gut-wrenching losses, the OP has not given up hope. He still has some in-the-money calls left. If they can moon by 1000%, he can make back his losses. In the meantime, he is forced to eat frozen meals. He YOLO'd all of his money into this Apple trade and was left with no money to pay his electricity bill.
Stop it. Get some help.
Next up we have user Gur Gur, who is down $26,000 or 100% of his position on his Twitter calls that expired worthless. He owned $69 strike calls expiring on April 30th. He bought the calls as an earnings play. Twitter reported earnings on April 29th, one day before his calls expired. Leading up to earnings, it was trading above $65 a share, just a few dollars shy of his strike price. If they beat earnings and stock price increase, he could have made massive tendies from the play. Instead, Twitter stock plunged as user metrics missed expectations. They reported monetizable users of 199 million. This was 0.5% below analyst estimates of 200 million. While this miss appears small, it caused Twitter stock to fall more than 15%, rendering its calls worthless. To protest his loss, the OP plans to boycott Twitter by deleting his account. Next up we have user DekaD, who has a diversified portfolio consisting entirely of a massive MVIS short position. He holds a wide range of microvision puts, most of which are expiring on May 21st. They range in strike price from $7 to $25. He is also directly short 500 shares of microvision. As of the time of this post on May 3rd, he has made 20% gains on his position, or almost $9,000. Microvision, or MVIS, is a small stock that has recently received a lot of hype on Wallstreetbets and other Reddit forums. The company makes very little revenue and negative profit. When the stock surpassed $20 a share, the OP thought that the valuation was too crazy and started buying puts. As the stock kept going up, he bought more and more puts until it peaked at a little over $25 a share. The day after he finished initiating his position, the stock started to tank. As of May 4th, the stock is down more than 50% from the highs. He made his initial investment of around $19,000. If Microvision continues its precipitous decline, he could multiply this investment many times over. This spectacular gain goes to show that you can sometimes make money by going against the grain and betting against the hype, although it surely is a risky proposition. Next we have user Start155, who says that in order to successfully play meme stocks, you have to be fast and first. Using this rule, he has made more than $200,000 of gains. His positions list shows a wall of green without a single losing position in sight. The positions include many options positions on stocks like GameStop, Tesla, Palantir, Fubo, and Ocugen. There are also several positions that are blocked out due to them being penny stocks or otherwise banned for use on Wallstreetbets. The gains on his positions range from $5,000 to $17,000, with the exception of one $84,000 gain, which is undisclosed. With the exception of the past couple months, these stocks have all done very well in the past half year. GameStop of course is up hugely, more than 10xing. Although Palantir has been in a dry spell recently, for those who bought the stock early on, it has been a big winner, more than doubling since its direct listing. Fubo is the same story. Since February, it has lost its momentum, but long-term holders or people who were in it early, such as the OP, have still done well. Ocugen is the one stock that has continued to outperform in recent weeks, and has been an absolute goldmine for investors. Such a consistent hit rate in terms of the number of trades that ended up in the green is impressive, and the commenters recognize that and appreciate it. Some even want the OP to take their money and trade it for them. Congratulations on your gains. Next we have user Hypothetically Woke, who seems to be only able to make money on rocket companies and never lose money. In early March, he traded rocket companies multiple times, making 26 times gains in the process. In March, rocket companies experienced a small short squeeze that spanned a couple of days, during which time the stock price doubled from $20 a share to more than $40 a share. However, unlike GameStop, it quickly lost those gains as the short squeeze subsided. The OP was able to play rocket companies by buying 40 calls on Rocket with $34 strike prices on March 1st, right before the short squeeze. Then, the next day, when rocket companies really mooned, he sold them all in 3 tranches. His original cost basis was 20 cents per call, and he was able to sell them for anywhere from $2 per call to $6 per call. All in all, he made more than $20,000 on this $800 bet. To put it into perspective, this is where exactly the OP bought and then sold the calls. He bought them on the day when the short squeeze first started happening, but had not gained steam yet, and the next day, after a 70% one-day rally, sold out of the position. This gain shows that in order to make money on these kinds of trades, it is important to be able to know when you are still in front of the curve. Otherwise, it's likely too late. Next we have user Johnny Ghost, with a massive 420% gain in only 10 days with Opendoor. He bought $22.50 strike calls on Opendoor expiring later this month. Opendoor got caught up in the SPAC crash of the past several months, and has been on the way down since mid-February. However, there have been multi-day spans of significant short-term gains on the stock, which is how the OP made his money. He bought on the dip and sold at the top, allowing him to extract profits out of a downtrending stock. With 120 contracts and $5,000 of initial investment total, he was able to make almost 20 grand of pure profits from the trade. The commenters seem to be overwhelmingly bullish on Opendoor. Most people seem to think that it is not like the other SPACs, and that it is a solid company in its own right. Opendoor is a real estate brokerage type company that competes with companies like Zillow and Redfin. They buy and sell houses from people, making profits by paying low prices for houses and flipping them for a markup. Many people think that it has the potential to take a lot of market share from Zillow and other incumbents. However, after getting caught up in the SPAC frenzy, its stock is sure to have a volatile ride in the near term. Congratulations on your gains. Alright guys, that wraps it up for this video. If you like the content, make sure to smash that like button and subscribe for future videos. Also, make sure to check out our second channel, WSM Research, where we post DD on high growth stocks. As always, thank you guys so much for watching. Wall Street Millennial, signing out.